Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cowguy, and this is the last hour trade. This is the last time we're going to get to talk to each other before we actually settle these markets. We've got about a half hour left in the grains and 15 minutes left in the livestock. So let's kind of get a feeling for where we're at here, so you get a feeling of where we're going to trade overnight and then obviously into tomorrow morning. Let's take a look at this corn board. It's good to see this corn kind of stiffen up here a little bit. Diesel's up 4 1/4 at 5.55 3/4. We've got March up 4 1/2 at 5.65 1/2. Okay. What about beans? They were slipping, but it looks as though they may be actually coming back a little bit strong here too, so it's good to see. We tried to get down into the teens here as far as the change on day, but now we're back above that 20-cent level. Jan's up 23.5 cents at 12.12, but look at that. We were up at 12.40 earlier, right after that announcement. March up 22 3/4 cents at 12.23 1/2, so holding on to some decent gains over there. That's good to see. How about wheat? Wheat market's higher as well. Double-digit gain in D's, 10.5 cents higher at 7.78 1/2. About a penny and a half, 2 cents off the highs there. March up 9 3/4 cents at 7.91 even. All right, let's take a quick trip down to Kansas City at the hard red wheat there. Deese is up 12 cents. There we go, 7.92 3/4. That's about 2 cents off the highs there. March up 12 1/4, 7.97 1/4. It's one of those days. It's kind of fun talking about these prices, right? Green across the screen, not bad. Deese up 17 1/4 cents in spring wheat, Minneapolis, 10.26 even. That's good to say. That's up. Tick off the highs, a couple ticks off the highs there. March, 19 cents higher in spring wheat, Minneapolis. It's 10.15 3/4. Again, just a tick off the high. So going into things pretty strong here. We'll take a look at what's cotton doing. Cotton also, I think, caught fire here as well. Look at this, 262 higher at 119.17. Again, we have over a 3-cent range over in that cotton market. So that's still volatile, looking to hit 120. Wow, geez. Okay, let's bring in Ted Seifried from Zaner Ag Hedge. Ted, I don't know how you do it, but you seem to be always the guy that we have on last on the day that we go have reports. But what are your thoughts? I mean, obviously, you see the numbers that I've seen, and things look pretty good right now. Where do we stand?
Well, the cream rises to the top, Scott. But, hey, I've been saying for the last few days, we really beat up soybeans especially, but also corn coming into this report. This was going to have to be a really bearish report to continue to push pressure on us and to push us down. It wasn't. Yes, they raised the corn yield, but they offset that with higher ethanol demand, and we have a little bit lower carryover than what we were looking at last month. That's rather friendly, but the big surprise was soybean yield going down.
Yep.
Everybody's trade estimate had soybean yields going higher. And when I first saw that print, I was like, okay, how'd they do that? And then, looking at it state by state, okay, I see it. It makes sense to me. So now the question is, what other bad news are we going to have between now and that January final production report? Because we know they're not going to do much with that in December. So going forward for the next 2 months, we've really, I think, gotten all the worst of the news factored in. The fast start to the South American plant or Brazilian planting factored in. The idea that, maybe we're going to see an acreage shift from corn to beans. I think we factored that in maybe more than we should have, especially with natural gas prices coming down dramatically here today. We saw the USDA's outlook numbers, not really adding to soybean acres dramatically. So I think we've kind of factored in the whole negative shift mentality in soybeans, going from that idea of 150 million bushel carryover now to a 340 million bushel carryover. We had kind of overshot the mark to what we were thinking that carryover could grow to. And now we've got South American weather risk in front of us. So this report, I think, serves as putting the low in for soybeans for now. We have a nice reversal higher. It looks like we're going to kind of build a little bit of strength. I don't mind that we're not closing up at the highs, but it looks really good. And also, Scott, I've been saying it for a couple of weeks now. Look at the soybean meal chart. It looks like it wants to break out to the upside. Soybean meal stocks have gotten really tight here domestically, and we've had rallies many times in the past where soybean yield or soybean meal has led soybeans higher, even though maybe the soybean fundamentals by themselves aren't terribly bullish. We have what I call a meal deal, where meal prices start to rally and beans follow. I think we're sitting on the edge of that right now.
I had a meal deal, but that was at McDonald's, so I can't say that. But anyway, bad joke. All right, well, that's great stuff. And you know what, Ted, it's always great to have you on when we talk about these things. Yeah. We're going to go away. Stay right there. We're going to come back, talk livestock with Ted Seifried from Zaner Ag Hedge after these messages. Welcome back to Market Day Report. I'm Scott Shellady on a day that's been pretty busy. We've had a lot to talk about here. I'm otherwise known as the Cowguy, and I'm going to use that as a cheap segue into talking about live cattle. Let's go over to that live cattle board and see what we've got going on over there. Pretty quiet. Look at this. A little something for everybody there, right? We've got Dees up a nickel at 132.15, while Feb's off 27 cents at 136.85. We go out to say June and August, they're all up 20 cents as well. So not a ton happening over there. A pretty mixed board, but just holding in around the neighborhood of unchanged. All right, let's take a look at feeder cattle. What's happening there? We are a little easier here as corn gains back a little bit of its strength. January is down 52 cents at 159.77. March is off 32 cents at 161.07. All right, how about lean hogs? Let's look at December. It's off $1.42. 74.95. Just a little bit off the lows there. We're going to have to keep an eye on that. Feb's off 70 cents at 78.67. All right, let's bring back in Ted Seifried from Zaner Ag Hedge in Chicago. All right, Ted, you're a bubbling fountain of knowledge when it comes to these livestock things. Why don't you give us what you got?
Well, first of all, Scott, I got to say, I really like the skull and crossbones bow tie that you've got going on today. And you've inspired me. You've inspired me. Next Halloween, I am now going to be Scott the Cowguy. That I don't know why I didn't think of that.
You got to put some weight on. You got to put some weight on.
But yeah. That's, yeah.
All right. Moving right along.
Okay. Right. Yeah. So let's start with hog. I don't love what we're seeing here today. We had bounced off the lows. We got a nice little double bottom formation on that chart. We failed at resistance, and today we're kind of flushing out to the downside. I don't like that. We're sort of ping-ponging between key resistance or support and resistance level, but we're staying at the lower end of the range, and that doesn't bode well. I really would like to see hogs come back tomorrow. Otherwise, I get a little bit concerned. Again, weights are up, which means we're backed up on marketing, so that's kind of what's keeping that December under pressure. Feeder cattle, not surprising on a not bearish corn report that feeder cattle are under a little bit of pressure today. Right. But live cattle holding on to it, faring well so far.
Awesome stuff. Really appreciate you coming on, Ted. Thanks for your post the meeting analysis there. We really appreciate it. All right, that's it from Ted in Chicago. I'm Scott in Nashville. I'm going to throw this back over to Tammy.